Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, May 23rd, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right here, you'll notice that price bounced late in the day on Friday, the last hour. Short covering rally put price right back to the open of the session there. A little bit of a lower low failure, not quite a significant rejection. We're still in a very clear downtrending market. We haven't even reached the bearish Pima trigger zone here, and we're testing prices just above, or had tested prices just above 2-day highs. Again, this is a very bearish market where any failed new high could lead to another round of weakness. Any rally could be sold the very next day until market structure can be recovered from above. So for example, this zone right here, very important. You have that 4100 level. Until price can really push through 4100 and hold it and rally again, this thing is still going to be looking at a clean downward market structure type of environment here. So even if price were to rally this week up to 4100, it likely offers another opportunity for bears to defend and rotate this thing back down. So again, any strength likely still an opportunity to sell until proven otherwise. Again, from a longer term perspective, we're still looking at a likely continuation downward to the previous year's low. That's 36.52.5, and beyond that we still have a significant CLVN down below at 3200, which also lines up with a prior market structure level, major support as well. So 3200 back to these lows here after a big rounded top up here. That all suggests more likely downward trending price action for the foreseeable future, unless we can see some sort of significant recovery of 4100 and then 4300. And until then, again, every bounce could still be sold until we really wipe this thing out. So more downtrending price action on a longer or medium term basis. And right now, on a short-term basis, even if we do pop, it could be seen as an opportunity to sell the rip. We do have FOMC meeting minutes later on this week. Fed Chair Powell speaks tomorrow around lunchtime, 11:20 a.m. Central. So all eyes on Fed Chair Powell tomorrow. And we do have a number of items here like new home sales, for example, services PMI, GDP, and things of that nature later on this week that could provide a catalyst for volatility. We take a look here at the NQ. You'll notice here very similar price action as well, downtrending price action, very clear sell the rips on every bounce, whether it's a 1-day bounce, a 2 or 3-day bounce. We're still seeing weakness. We have these 2-day highs from last week. Again, if we were to push through those highs, that could still provide an opportunity to sell this thing. You have the 12.5, 12.6 zone right about here. Again, any rally into that zone could still be sold. But if price can recover that level somehow, pushing through it here, making it support, we could see a little bit of a short-term rally to the upside. Again, that's not very likely, but anything can happen in a market like this, where even in a bearish market, you tend to see very aggressive rallies. For example, this type of rally, very aggressive rallies can happen in a bear market, but after that happens, you tend to see a big-time wipeout phase. For this one, we've already tested and are now currently below the previous year's low. The next major level below could take us about another 1,000 to 1,200 points down, easy, into the 10.6 level. 10.6 is the next key zone down below, but beyond that, again, that's an easy target there. We could be looking at even more downward price discovery phase up ahead. So again, still trending downward until proven otherwise. Any rally early this week could be seen as an opportunity to sell for another round of weakness ahead. We take a look here at crude oil. Crude oil has continued to trade really well within that trading range here. Again, the upper end of the range is about the 115, 116 zone. Lower end of the range down here around 94, 95. That center portion of the range, 104, 105, has still been very reliable. So when we get to an edge, it still snaps back to that area. You get down here, it snaps back up. So right now we're still kind of in that phase. Overall, we're likely going to continue to see range-bound activity in this market until the foreseeable future here. We're basically in this range, and anytime you get up here, it could still be an opportunity back down. If for some reason we rotate down here, it could still pop back up. But we do have an upward bias. There is a bit of a rounded behavior on this right side, so it wouldn't be surprising if prices do attempt to push through the 115, 116 zone at some point down the road. Taking a look here at Bitcoin. Right now, Bitcoin's up 3.6% at the moment. It's still building significant energy within this range right here. We've been quantifying this range for a while. It's now a 7-day developing range. So if we bring this up to 7 days, it is building even more energy. You'll notice right here that, basically the 7-day range is all right there in that tiny little square, and it's basically that high to this low. The rest of the 5 days have been within that range, and you can see it's building that energy. We could be looking at 10,000 plus points of movement here pretty soon, and it could be to the downside. Again, there's a couple of various scenarios that we could see play out. For example, this scenario here where we saw the drop, rejection, and then you saw that narrow range, and then you saw the wipeout. Over here you saw that drop with a rejection, narrow range, and you saw the rally. So again, those are the two various ways this could go. If you have major bulls defending in this zone, and then over here you have a narrow range. If these bulls don't start getting paid, again, you're going to start to see a long liquidation, and a breakthrough 28K here could open up a big time wipeout phase like this. Right now, very hard to see this thing actually rallying, but if we do, there could be a return back toward 38K here, and that's prior support. So at the moment, this amount of points brings us enough energy to get us to that zone. But again, that may be a long shot in this current market. So right now, developing the energy, major breakout could be seen at some point soon. We take a look at Ether futures. This one's up 4.8% right now, and a similar range developing after that wipeout phase. Again, very similar to a narrow range after this drop where it dropped below. After this drop, rejection, narrow range here, and you saw the rally. So right now you're seeing the drop. Here's your 7-day narrow range developing, and again, that's about 1,000 points of potential movement, and we're sitting at 2,000 right now, 2,060. If we break 1950 and drop 1,000 points, you're going below $1,000, right? You're going all the way back down toward the 700, 800 zone down the way, which could wipe out all of last year's gains. So again, keeping an eye on this range as it continues to develop, build energy, and at some point we'll see a significant reaction. If we see some sort of failed rally, that top could be used as a significant opportunity to swing this thing the other way. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.